Business owner or not, here are 5 IRS audit triggers you need to know about. Generally speaking, the IRS has 3 years to audit you from the date that you filed your tax return or when the return was due, whichever is later. However, if you underreported income, that window does double to 6 years. And if there are implications of fraud, then the IRS can audit you at any time. Common IRS audit triggers include claiming real estate professional status when you have a W-2 day job. Lately, I've been seeing a rise in short-term rental strategy audits. So if you are claiming this strategy, make sure that it is properly documented, especially with regard to your material participation hours. Amending a tax return. This isn't spoken about enough, but when you amend a tax return, it is subject to a manual review and it could actually trigger an audit. If you own an S corporation and you are not taking a salary, that also could trigger an audit. A mismatch in income. So when you receive a 1099, the IRS also receives a copy of a 1099. If you fail to report it properly, then that also could trigger an IRS audit. There are so many more IRS red flags. That's why it's imperative that you work with the right professional to make sure that they're familiar with these strategies and everything is documented accordingly.